Hi, folks. Welcome back to an edition of Money and Politics, and hopefully you read that. I'll reemphasize this. Some people just gloss over it. I'm not a registered broker or financial advisor. The discussion here for educational purposes only. Any investment that you make, and pay attention to this, it's your decision and yours alone. Any gains you make are yours to keep. Any losses you incur are yours and yours alone. Do not make a financial decision based only on one person's opinion. These discussions here are of a general nature and not intended to be tailored to an individual. I talked about that in my last video. I'm talking about this in a generic sense because I have to of necessity. All trading involves risk. We will sometimes discuss investments that I own. Sometimes I'll discuss investments I don't own. But all the decisions to purchase any security are yours and yours alone. And with that, I'm going to come to you again. I wanted to not just do one and then be gone for a month. I wanted to try to get back into the pattern of bringing you some videos on a timely fashion. And as I discussed, money and politics. Money and politics is exactly what we're going through right now on the world stage, on Wall Street. Money and politics. And what do we have? We have a whole lot of things going on. Primarily in the near term, what we have is the debt ceiling. That's a risk to markets. I don't put much on it. I don't think that we're going to be held up for very long here. Here's the thing. Biden does not have the votes to get an agreement to raise the debt ceiling without some prohibitions, that they call a clean bill. A clean bill would be just raise the debt ceiling and we'll go on our merry way. Biden's not going to get that. So he has to negotiate with the Republicans. The Republicans have already passed an increase in the House on a debt ceiling, not taken up yet in the Senate, which is controlled by the Democrats. Some version of what the House passed, I think, will be the final result. But folks, we've got to get a handle on this spending. It increased by 20%, just like in the last 18 months, last 12 months or so. It also, the national debt increased over the last 6 years, going from memory here, from about $20 trillion to now we're at about 31.7 trillion. So it's up over 50% in just 6 years, more than all the debt we incurred since George Washington going forward. And we're up 50% in just 6 years. We've got to tap the brakes here. So what I wanted to talk to you about tonight is both something about the debt, the political situation, as well as equities. And one thing, because I didn't really talk about that last time, was just a reintroduction of the channel. As you know, for those who watch, and there was something like 800 watch. If you haven't watched, let me refresh for those who have watched me before and those who haven't. Here is now, on May 23rd, some of the favorite things that I'm looking at. It's not a portfolio of 400 stocks. I don't think you need that. And a number of these are indexes, which gives you automatic diversification. So one of my number one picks, as I've talked about ever since I started the channel, is Inmode, currently at $34. Dig is an oil index, a leverage index, 2x. So that will go up at a faster pace. It'll go down at a faster pace than an underlying stock. The TQQ also, that is a leveraged index, a 3X leveraged index on the NASDAQ, currently at $30.83 as of today's close. UPRO, that is a 3X leveraged index on the S&P 500. So when you buy the NASDAQ, you get 100 shares there. The S&P 500, obviously 500. These are leveraged indexes of the underlying index. So UPRO 3X, hopefully that's clear on the S&P 500, and TQQ 3X on the NASDAQ. And then on the OTC market, this is for Those of you who like a penny stock, generally speaking, I tell you to avoid them. As I said, I've only invested in very few over the last 30 years, and the fact that I went into any was because of Humble. But Nextech is at 54 cents, and that had about twice the average volume today. We need to talk about Nextech a lot more, and Thomas and I talked about it. Thomas, my son, we talked about that back in November. We need to do an update on Nextech. There are some big developments happening there. When I'm talking about this, by the way, for those of you who say, well, you were pumping that, I'm trying to give you objective information here. I'm selectively picking the stocks that I think you may want to pay attention to, investment vehicles. And as I put it here, not all of these are equities to watch. DIG is not one stock. TQQ and UPRO are not one stock. Nextech is. Although Nextech also has spun off some companies in which they still have a substantial ownership. So Nextech, when you buy that for 54 cents, you get not only Nextech, but you get equity positions that Nextech has in some of the companies that they spun off. That's why we need to do a focus on that. Inmode is one company, and that, as I say, is kind of like plastic surgery without the knife. They call it minimally invasive operation technique, and that is more like getting I don't want to get into too much details on here, but it's for fixing things like bags under your eyes, saggy jaw lines, necks that are sagging. So there's a lot of money being spent. So those are the stocks that I am following. Let's take a quick look, and let's start with Inmode. Inmode today, here's the chart. Again, one of my favorite stocks. This is on Yahoo Finance. It's a tool that's free, and I would recommend that you, use this to your advantage if you want. If you put the symbol in up here at the top in that search bar, you get a page and it gives you all this information. And it also gives you a chart. Now, if I click right here in the upper right corner of the chart, it'll make it full screen. We'll do that in a second. But let's go down, and I'm going to have to take myself out of the shot here. If you scroll down on the right-hand side, you can see these are the green is the revenue numbers, that bar chart, and the blue are the earnings numbers. So you have, again here, I'm going to have to make this a little larger for my viewing to read that small type. Okay, so you got 2019 on the bar chart here, 2019, 2020, 21, and 2022. So you can see there is massive growth in the revenues over the last 4 years, and it continues to grow. And again, this is another one where we need to do a separate video on this, but I wanted to kind of take a quick look at some of these stocks that I am following at this time, some of these positions. And those of you who have followed me before know that Inmode is one of those stocks that I have talked about and continue to follow. Like virtually everything, not everything, but virtually everything, Inmode is down from the high, which the high for almost everything came in the early fall of 2021. And since then, the market came down quite a lot. And just like everything else, here at bottom, it was very low in June of last year. So, almost 1 year ago, it went down to very low, very 52-week low there. And now it's come back. So One of the things too that I'm following, let's get off of Inmode and let's go to Dig. And Dig, I want to, that's the 2X oil index. And let me make it a simple adjustment here real quick. Boom. And then these, when you go into this software for broadcast, it makes everything smaller, which is why I got to stop to read some of this. So we see now that Dig is at $34.29. Why do I like Dig? Dig is not one company. Dig gives you the holdings in a number of different companies in the oil industry. And you see here their top holdings, and you have ExxonMobil, Chevron, ConocoPhillips in there. Another stock that I want to compare to, here's how, first of all, here's how Dig has gone. We know that oil has come down from when we were paying like $4 a gallon, and it's down some, but we still have to be looking at some of the threats to oil. So let's talk about oil right now, and what do we think is the future of the price of oil? Number one, oil typically goes up in the summer driving season, and we're on the cusp of the summer driving season, number one. Number two, Saudi Arabia came out and said that they may, at the next OPEC meeting next month, there may be a cutback in oil production. That would add to a shortage, which means it would drive the price of oil up. So those are two reasons why the price of oil could go up. We're still dealing with Ukraine, and that can impact, Russia's out there. Now, Russia, oddly, because Russia makes all of its money on oil, that's their whole economy drives around the price of oil. Because of Ukraine going on, Russia's trying to sell a lot of its oil on the world market. Now, there are sanctions against Russian oil, but of course they still have customers. And, even if they're selling just to the Chinese, as an example, that still then frees up oil that the Chinese would have been buying from other sources. So Russian oil is being pumped out. So on one hand, you have a cutback that could be coming from OPEC. You have the possibility of the impact of the summer driving season. You have what is likely to happen where the Biden administration will try to replace some of the oil in the Strategic Petroleum Reserve that it took out before to artificially drive the price of gasoline down by putting more oil onto the market. And on the countervailing side, what do we have? We have the possibility that oil could go possibly down because we might go into a recession, and a recession would decrease demand. Where do I think it stands? I think we're likely to have oil stay about where it is, and right now oil is at about $70 a barrel. I think we're likely to stay there or go higher. And here you have just, let's see if I can point to it. You got it here at about $73.85 a barrel. So I think Dig would be a good way to play the oil game. Now, let me give you one other thing. And again, if you don't know, if you click in the upper right on this chart, on any chart on Yahoo Finance, you're going to be able to compare two different stocks or more if you wish. And so I am comparing here in yellow. Dig is in blue, and Occidental Petroleum, OXY is the symbol, is in yellow. And you can see that actually Occidental, they're both, is oil. That's a one company, right? That's oil. And in the blue is Dig. So for here, year to date, Occidental Petroleum's really outperformed Dig, although they're both down. Over a one-year chart, you have times where you can see you're going to get more on the upside and more on the downside. Let's look over here in last September when we had the oil price go down a bit. You can see how, because it's a leveraged index, it's going to go down faster than an oil company. And you can see that right here. Now, what else do I want you to learn from this? Because it's an index, it's going to come up a lot faster. So if you look at this chart and you say, hey, in September, the price of oil really fell, maybe that's a time to have a position in oil. And you don't want to go crazy, folks. You always want to manage your risk, remember. So what do? You take a position you can and, take a risk. It's a risk, but you can put some money in if it falls precipitously. And look how the blue line here, it came roaring back. And then the dig exceeded the upside value of Occidental Petroleum. So, one, I'm comparing these two stocks for you, but also I want you to see how a leveraged index is going to move in a much more dramatic fashion than a similar one company stock. And people often will try to tell you in the investment game that you shouldn't be looking at things that are real volatile. I differ in my investment strategy. You may not like my investment strategy, but I differ in that I say you want to be aware of volatility and you want to use it to your advantage. So when you get a wild swing to one side, if you have some understanding, as I just was discussing, about what might move oil or some other stock, if you get a wild swing to one side, then that might be a good time to open a position. That's number 1 point. Number 2 point, when you open a position, don't put all the money you want to put into a position in at one time. If you say, I want to put $500 in, then maybe just start off with putting $200 in. If you want to put $1,000 into that position, maybe just start off by putting $200 or $300 or $400 in. Don't drop all your investment in at one point. It might go lower, and then you'd want to buy some more. And if you put it all in, at one time, yes, you might catch the bottom, but you might not. And then you're not going to have any more money to put into the position, or you're going to be taking on too much risk if you keep plowing money into a position that you don't want to. Remember, we want to limit our positions, the amount of money we put in any one position, to limit our risk. We're not out there to try to hit a grand slam home run every time we make an investment. What we want to do is build our wealth using our skills here, our awareness of what's going on in the world. And that's why I called the channel Money and Politics when I started 2 years ago. So, okay, so that's that. Now, what else? Let's take a quick look here. We talked about Inmode, we talked about Dig. Let's take a quick look at Nextech. Nextech, again, I would have to go into a much longer discussion about what this is, but it's a tech stock, and basically it's doing a variety of things. It's building models, three-dimensional models. So when you go on and you look at something for sale, and you look at a picture on, let's say, Yahoo Finance or Target, here you're seeing a picture here. With a Nextech 3D model, you'd be able to take this thing and spin it. I can show you that. I can't do it now because I don't want to do a 2-hour video, but I do want to do it where we focus just on Nextech and show you, give you the story of what's going on and some of the news that has developed since we talked about it. Here's something I do want to bring to your attention about Nextech. And this is not about the stock per se or their revenues. I'm looking off here, so I want to increase this. When you go on Yahoo Finance, there is news about typically there's news about the channels. Now, look at this one here. This came out yesterday. Nextech Amazon 3D models are the prime driver of Nextech AR's growth. AR is artificial reality. So Amazon is a customer of Nextech. But the other thing I want you to look at here is just above the blue line where it says Nextech Amazon. Look who posted the video, and that's Zacks. Zack is a financial publishing house. Zacks Small Cap Research. The fact that Zack, which is a very legitimate company, you know, you get some of these people in the financial publishing world that are paid to publish. They're paid by the company to put out a press release. It's kind of like a Hollywood star having a PR person putting out a fluff piece on them. So you have to know, is this a legitimate source or not? Zacks is a legitimate source. They're a good source. I don't get anything by saying it, but if you wanted to subscribe to Zacks, I would not tell you that's a bad idea. That it's not a bad idea. It's a good idea. I wish I was getting a promotion from them. I'd be happy to promote them. They're a good company. But the point I'm making is this, that Nextech has a following, even though it's a penny stock, even though it's on the OTC. This is not like a whole bunch of fly-by-night penny stocks. This is a very legitimate company, Nextech. They're growing their revenues. Again, we'll update it. And the fact that they're legitimate is one of the reasons why Zacks went ahead and bothered to just, you know, cover them. Okay. Now, one of my faults is sometimes I procrastinate and don't do things. It's easy to blow it off and say I'll do it tomorrow. I didn't want to do that. I wanted to get something out here today. But the other thing is, once I get going, I often don't stop when I should. So hopefully, I'm going to put out more videos, but I'm going to try to make them shorter, although this is about 20 minutes or so already. But because I wanted to update you on a number of the stocks. And again, if you didn't bring it right up again real quick here, Inmode, Dig, TQQ, I would have gone into that, and UPRO, but you know, if you don't own TQQ and you want to take a position, I would, again, strongly encourage you to take a limited position. You can buy 10 shares, that's $300. You can buy one share if you want. Because we don't know where let's talk about politics here. We don't know where the market's going to go. No one has a crystal ball. But what we do know is there's going to be a presidential election in 2024. Ron DeSantis is announcing for president tomorrow on Wednesday. Tim Scott of South Carolina, the senator, announced yesterday for president, both of them on the Republican ticket. At this time, I would have to say, barring something unusual happening, I think Donald Trump is probably going to be the nominee of the Republican Party. I'm not so sure. I have a hard time believing that Biden is going to be the president. So as we look, there's so many things that are blowing in the wind here with the war in Ukraine. We've got China acting up from time to time. They seem to have quieted down a little bit. We've got the presidency election coming up. We've got all kinds of people predicting we're going to have a recession. We have the Fed deciding are they or are they not going to increase interest rates again in June. And if they do, it'll probably be by another quarter of a percentage point. And my leaning is that they are going to. I'll close out with this. So where we are, I clearly remember where we were back in 1979, where we were in 1980, and when the Federal Reserve came in and raised interest rates very high to put the brakes on the economy. We had inflation under Nixon. It mitigated somewhat under Ford. But increased then again under Carter. Part of that was from the spending we had done in the Vietnam War, which had ended by that time. But the Federal Reserve came in and put the brakes on by just driving up interest rates. That's why I tell kids when I bought my first house in 1981, my mortgage was 15.5% interest. And at a certain time, I had a printing business I was running, and one of the people that worked for me came in one day and he said he bought a CD, a certificate of deposit, that was going to pay him 18% interest, which was insane. I mean, it's just, that's how high interest rates went. And it drove us into a very steep recession. And that did not start to turn around until 1983 for a couple of reasons. But one of the big reasons back then was that Ronald Reagan, when he came in as president in the spring of '81, he cut taxes, and the taxes were cut by 30%, but they were because the Democrats said they didn't want all 30% at one time. They wanted the 30% in 3 stages, which I would say was a mistake then. It was a mistake historically because it slowed the economy growing by having the taxes cut in stages. However, in '83, the last tax cut went into effect, and the economy in '83 started to grow, and we had the longest bull market at that time in history until the one we had right after the crash of '08, which started in March of 2009 and lasted for basically 10 years until COVID hit. So that's it, folks. I apologize for going now another half hour, but I wanted, again, to lay a foundation of kind of what I was looking at, and to kind of, at least without, if I focus too much just on one of stocks, which I will do, but if I do that right off the bat, it would take me, 3 weeks to a month to get through just what we talked about tonight. So give me your thoughts and your comments. One last thing. I've had people, and I appreciate you commenting on the last video, but don't do what people were doing, especially when I was posting all the time. Somebody told them about some penny stock, ABC or whatever, and they say, hey, what do you think of this stock? And they don't tell me anything about it. I don't know if they know anything about it. They don't tell me what industry it's in, as if I'm supposed to, with nothing else to do, go out and spend several hours to do research on a penny stock. Folks, if you want to know something, there's the internet, there's Yahoo Finance, there's all kinds of sources, and you would be doing yourself a lot of good by going out and doing your own research. So I'm not going to know every stock under the sun, especially if you're throwing a penny stock at me. Also, if you want me to look at it, then show me that you've done some research yourself and tell me why you think it's worth taking a look at. What's the story? Have they reinvented the wheel? Are they turning straw into gold? What's their business? How much revenues do they have? What kind of cash do they have? Let's do some research out there, because it's the same thing I would have to do, and I'm just not going to have the time to take a look at it if you're throwing everything at me. Real quick, if you want to follow me on Twitter, I do throw things on Twitter as sometimes news breaks on different items, like if they had an agreement come out all of a sudden on the, let's say, the debt ceiling. I think the debt ceiling is more or less a show. Things are going to get done. If you want to write me, moneyandpoliticsnow@gmail.com. And I apologize if I don't get right back to you. I'll try to do that. We are, again, as I said last time, we're right at the end of the legislative session. They were actually supposed to finish last week. They didn't. They'll probably finish at the end of this week, the Illinois legislature, I should say, which I cover. So that's given me a little more busy work than what I would otherwise have, which is another reason why I wanted to come to you tonight, because, I might get tied up for several days and then all of a sudden a week has gone by or 10 days has come by and I haven't given you another video. In the future, I hope that what I can do is nail down some of these videos so that they are more in the 8-minute to 10-minute time period, and maybe then I will, shake it up. Sometimes it's good to go into a lot of depth. Sometimes it's not, and just kind of give you a quick overview on some of the things that are going on. So that said, I'll say goodbye, and I hope you've had a great day, folks. Whoops, let me do this. Hope you had a great day. Thanks for joining me, as always, and we'll continue to be in touch. Take care.